episode here. Go ahead. Welcome, everybody. Make sure you can hear us okay. Go ahead. Literally continue what you were saying. Yeah.
Oh, yeah. So I was listening to the call. And during the call, when there was a question about factories that was asked. And if you listen to Elon's answer, he says 2023 and the following year, that there were going to be two separate announcements. He didn't, and it could be more than two, but it was clearly both in 2023 and in 2024 by his statement. Now, may not happen, but I caught it, and I think it was not unintentional.
Do you think Nevada was that factory announcement for this year, or do you think there's a different one?
Yeah, I think it's different.
Yeah.
I think Nevada is just more of an expansion. That's how you would look at it.
Yeah. Because I know the Mexico one, and the producer wife, you can find this on Twitter. Maybe I'll send you the link. But I think that the Mexico one is, it was rumored that they haven't reached a deal, and supposedly it's going to go live March. They're going to announce it in March or something. Did any of you guys see that as well, or was it just me that came across it? Somebody in the comments, see if you can confirm that for me. I'll look for it on Twitter too. But I didn't hear the 2024. Maybe I have to go back and re-listen to it.
You know, the problem with all those, when you hear it from the location that's going to get the factory, you never know if they're just pumping, and it's not based in fact. That's the hard part.
Yeah, for sure. Yeah, we'll I'm actually very interested. They're going to have to. They have so much stuff coming down the pipeline. But the one thing that's been going on, by the way, welcome in everybody. It was just I just felt like that was a good place to get started. If you're new to the format of the channel, this is our Friday community forum where my community members jump on a live stream with me, and we just sit down and chat everything about Tesla, whatever's going on in the market, whatever else comes up. Really, the goal of these forums is to be as informative as possible and to really get the community together and figure out, okay, what's going on the last week, what's going to happen in the next few weeks, maybe for the year, just to throw around ideas and everything. So in the comment section, obviously, feel free to do that as well. We want to keep the comment section nice and lively. All ideas are welcome. All discussions are welcome. Just make sure we're all respectful to each other, and we allow ourselves to really just throw out ideas and see where they go. So the big thing that has happened this week, obviously, Q4 earnings from Tesla. They beat on some lines, they missed on some lines, but really the big story, I think, and I love to get everybody's thoughts, is how the stock has been reacting since the earnings report. During the earnings, when earnings came out, it was flat. I mean, when we were tracking the look at this, beautiful producer wife, just on fire, just a seasoned veteran now. Tesla stock is up almost 9% for the day, up to 174. If we look at when earnings was released, which was 125, if you go to that right before where it says 126, babe, do you see that? Like in the bottom, it says 126. Hover over that candle. So go up a little bit and then to the right a little bit. Yeah, right there. A little bit more to where the day ended. Yeah. So we ended the day at 144. And then now we're up to 174. So we've gone up $20, which is, somebody help me do the math. What percentage increase is that? A bunch.
We've gone up almost 20%. Almost
20%. Yeah. So pretty big run up since the earnings. Big run up here in the last hour or two. Tesla bears and Tesla shorts in dismay as we speak. But why do you guys think this is happening? Maybe we'll go down the row here. Rodman, then Hans, and then Richard, and we'll turn the conversation. What's going on?
I think the first thing should be obvious that the first thing that happened was at the end of last quarter, people are harvesting losses. So that's probably a big thing. And we just had no news. Like, people didn't know. Like, people were assuming the worst. And now that we see that it's not hitting as bad, it was clearly oversold, and people are buying back in. And then, I'm not sure how much short interest there was, but clearly there's enough people piling in that anyone who was short is going to get popped. So, yeah, that's my thinking.
Yeah, I think I would agree with Rodman on those points. Woohoo.
Go first. Things happening.
Yeah, I thought we were, I was just listening to the community, and I was thinking this at the time. The sentiment was so bad that, when the sentiment is that bad, we probably bottomed at that point in time. And like fingers, but like when Lee kind of sold off, that was kind of like the signal. Well, it's so bad that we're probably going in a different direction. So I think we were just way oversold, and it was just not a reasonable valuation at that point in time. And it was a natural point for probably there were a whole bunch of algorithms that kicked in at 100 or 101, and that helped. And then just people started FOMOing back in, which is part of the problem, by the way. It goes both ways. So when we went down like a rocket. And when we're going up like a rocket, because a 75% move in 1 month, that is ridiculous. That's not a healthy. I'm talking about like for the greater stock market, that's not healthy. It's not healthy for a stock to go up and down 75% in a month. That means that there's something, this is my view. I think there's something amiss. And just to throw it in, today, there's a march in Washington at the SEC regarding the naked shorts and the issue of naked shorts. So you might see it on the news tonight. And the chief enforcement officer of FINRA resigned this week also. So there may be other things in the background that are contributing to this. And as we discussed kind of before, there are technical traders that would say that technically this is what Tesla should be doing, that it should be going up to, like we were talking about it, that on the technical basis, and we were somewhat skeptical about the accuracy of the technicals, but on the technical basis, it might go up to like 190 and then kind of form like it's forming a cup and handle, and then drop and then go up back above 190. So I think all those factors might be playing in.
Okay. Go ahead, Rodman.
Yeah, I mean, if you think about to December 1st, so I'm on Yahoo Finance. December 1st, we were at 194.70. So
sorry, can you pull up the chart, producer wife, so we can look at it together? Pull up the chart again, and then let's look at the your September. So let's look at the 6 months chart. Go to 6 months. Perfect. Okay, and then yeah.
Right. So if you just hit December 1st, it's like the beginning of the slide. Yep, that's like where it peaked, and then it just like went downhill from there. So by the time we hit December 30th, we're looking at, what is that, 120? So yeah, like that whole month we just had no news except for, Elon was taking over Twitter, and like everyone was just getting really upset. And I think a lot of it had to do with margin unwinding, which is like, it's practically the opposite of what happens when it's a short squeeze, right? Short squeeze means people need to cover their short position, so they have to buy it higher. And then that pushes the next person, that pushes the price up. And so that people are, that have the short positions, they keep getting knocked off the ladder. Well, like a margin squeeze is the exact opposite. People are, you might have a pretty good margin base, like protection, and then someone gets hit, and then they have to sell off, and it drops the price lower. And so the person who's next on the line that's like got just a little bit less cushion, like they get knocked out, so they have to go cover, and then it just keeps going down the line. And who had the biggest margin position? It's Elon, right? So he had like tons of margin, and I believe that's why he had to sell. I could be wrong, but that's been my thinking through December. And then now we're back in a place where we actually have news, and so everyone's like, oh, it's not so bad. The banks kind of are seeing like a full picture again, and they see that things look a lot better than they thought. So, and then I think the price cuts just set everything up for, it's like, oh, like Tesla will survive this next year, and maybe other people won't. So
yeah, go ahead, Hans.
Yeah, the two things that I want to mention are just long-term and on a fundamentals basis is just uncertainty in the market. But then to also touch on, like, it's not just the margin calls that were creating the downward squeeze, but also, and this is something that I believe Matt Smith has talked about a lot, But when you have a bunch of longs with call options out there, on the back end, the market makers have to hedge shares to be able to fulfill those things if the options expire in the money. But then as the price goes down, the number of shares that they have to hedge that and be delta neutral goes down. And so it also can be kind of a compounding effect that as the price goes down, then market makers can roll off the amount that they have to hedge with. And then as it goes down, they roll off. And so it's multiple forms of downward pressure that we've kind of been going through over the past month. But then, yeah, I think I would agree with most of the things that have been said here. And then also, we did see a lot of uncertainty about the business get addressed directly in the earnings call this week. And so knowing that we've got twice the amount of orders versus production in the first of the year, our rate of production is the highest that it's ever been. And even at that level of production, we still have twice the number of orders. So if Elon and Zach and company are confident in their ability to operate the business at these level of price cuts, and these level of price cuts create an insane level of excess demand for the company, then we don't have to worry about demand this year. And that's really been, I think, the key uncertainty that most investors have felt over the past month is what's demand, what's demand, what's demand, what's demand. And it's like, okay, we have the levers, we have the arrows in our quiver that we need to address any demand concerns moving forward. So I think that's the biggest two components of where we're at right now is we've wiped out all the people who had fears. We've backstopped the uncertainty, and now we can go up.
You go ahead, Richard.
Yeah, I was going to say, so there's another thing that figures into it. As the price drops, not only do people get margin, but the maintenance requirements for their margin go up. So now they're required to have a higher maintenance, which triggers more margin, and it's kind of it's a cycle. The other thing I was going to say, another factor, I think, and I don't think this is coincidence, but Tesla rocketed after the Toyota guy stepped down. I think that was like a real symbolic, psychological, important move. Toyota's the big boy, sells the most units. They obviously, my reading is they obviously realize that they're in trouble and they need to shift gears, and they need somebody else to shift gears for them. And I thought that was a monumental change.
That's a very interesting point you bring up, because when I saw that link come through, oh my God, I'm trying to share a New York Times article with producer wife, and she can't pull it up. Oh, there you go. We got a Reuters one and a CNBC. Yeah, pick whichever you want. So no, one of those two should work from your standpoint. So I agree. So Toyota CEO and President Aiko continue with without supporting. On the bottom. No. On the bottom. Okay. Toyota CEO, if you scroll up to the headline, and President Akio Toyoda to step down. This was published yesterday around 2:30 a.m. Eastern time. If scrolling a little bit more, zoom in a little bit more so we can see it a little bit better there, producer wife. Toyota CEO and President Akio Toyoda, 66. Son of a bitch, these pop-ups, bro. Dude, surfing the web sucks so bad. Toyota CEO and President Akio Toyoda, 66, will step down from his post on April 1st, which is in roughly 2 months. The automaker said today he will be replaced as chief executive by current chief branding officer, interesting, Koji Sato. Let's read a little bit of the article. How long has Koji Sato been at the company for? Do we know?
He's from Lexus, I believe.
Okay, so he's been there. So Sato, 53, has been heading the Toyota Lexus division and the Gazoo Racing Company since 2020. So he's only been with the company for 3 years, I guess. Interesting. So I agree with you. I think Toyota, but also Akio has been at the company for a really long time, I believe, right? I think for at least 30 years. And I believe and I mean, y'all correct me if I'm wrong, but I think there's a certain culture in Japanese business that really rewards experience and seniorship, I guess. Am I right in saying that, or? Or
Yeah,
do
yeah,
you know?
he's the grandson, so he's been there for a long. I think he said he's been CEO since 2009, so he's been there for a long time.
Got it. So, I agree, and I wonder how much of this Toyota 66 is the grandson of the carmaker's founder and has served as chief executive since June 2009. Yep. And so, is this new CEO? Are they related to the family at all? Do we know?
No.
Maybe I no. Okay. Go ahead, Rodman. What are your thoughts?
So like this is like one of the clear signs that either the board or someone is saying, look at Tesla, look at what you've been saying, Akio, and you're clearly wrong. And like even he, like some of the messages that the things that he's been saying, let me see if I can pull it up on my end.
Okay, here we go. Sato on Thursday acknowledged Toyota must continue its green efforts. Energy security, for example, that is a big challenge that the whole planet needs to face, and also that the endeavor towards carbon neutrality would be one example of what we have to work on. So there's no language directly related to EVs, but they're talking about green energy and sort of this carbon neutrality thing. It is a big deal. I mean, this is a big deal. This is a pretty massive shift in the legacy automaker. Now, some people might say, well, you know, he's getting older. He's 66. He should be retiring. This is just par for the course. But then you also have other news, you know, like Ford going really heavy into EVs. There was one other one that recently happened. There was a recent news thing that broke. Oh, Ford is looking to sell their plant that they're closing down to BYD. So like right sizing their factories to what they think the decade's going to be doing, right? So just some weird stuff's going on as of late.
Then I saw today also that BYD just ordered 2 7,000 vehicle transport ships that they're going to vertically integrate their export shipping. So on top of purchasing a factory in Germany, like this is huge. This is scary for legacy auto. Like that is an unequivocal shot across the bow to legacy auto. Hey, we are BYD and we are coming for every international car market eventually. And I think, like you said with Corey the other day, that's probably going to start with the most concerted effort in Europe. And so, this is most scary for people like Renault and VW and that. But, GM and Ford aren't far behind.
Yeah. I was, by the way, one thing I was going to recommend, they were talking about like commercial during the earnings call. They were talking about, he alluded to other commercial applications. And we were talking about the semi for transporting their own vehicles, right? Why not electric ships to transport their own cars across the waters? If they could do it better and cheaper, why not?
There was a Joe Rogan podcast Elon did a couple years ago where Elon was like, when planes, when planes, or Joe was like, when planes, and then Elon's like, well, the way we got to do it is, I think he said, semis first, or Cybertruck, compact car, semi, boats, then planes, sort of going down the pecking order. And on the call, I don't know if you guys I would agree with this, but there's been a lot of teasing from Elon. I mean, he keeps getting asked these questions, but he keeps teasing these like new products nobody's talking about. And
not just Elon, but also Franz, who said, the stuff that y'all haven't seen yet is the stuff I'm most excited that I've ever worked on in my entire career.
Yeah. So wind turbines and boats.
Wind turbines is a terrible idea.
Dude, I triggered Matt so bad. And when I said wind, I actually called them windmills because, my ESL self, English as a second language self, is like, oh, windmills. Yeah, those are the wind things, And I'm like, oh, no, it's actually wind turbine. So that was a nice correction.
We can talk about that if you want to and why it's a terrible idea, but we don't have to. Well, so solar, I mean, the long and the short of it is that solar is on a much better cost curve. And just theoretically, from a first principle standpoint, like what's simpler? A solar cell that you can put on a little stand, or on, like, you could even literally put these on the ground, or a windmill or wind turbine that you have to like, the only way that you can generate any meaningful electricity with a wind turbine is you have to get it way the heck up in the air. Like it needs to be hundreds of feet, because the power that you can extract from the wind is a cube function with wind velocity. And so and then wind velocity just gets much higher the further above the ground that you get. And so the only way that that works is you got to get that thing way up there. And so that's why windmills and wind turbines are huge. Man, you got it stuck in my head now. That's why wind turbines are huge, and that's why they're so tall. And so it's just a very difficult product to make, like logistically. And then think about the size of the concrete foundation that's got to be in the ground to support that thing. And then it's just like there's very few places where wind energy makes a ton of sense, whereas solar is extremely scalable. It's easy, and so like if it's hard to make wind an addressable power solution for the entire world, well, how are you going to get those doublings of cumulative production that allow you to ride down the cost curve on Wright's law that solar can do? So like solar is just a way easier solution. It's going to address way more use cases way faster than wind turbines ever will. And so, yeah, the thing that makes the most sense from Tesla's standpoint, from a leverage standpoint on accelerating the world's transition to sustainable energy, is first you got to do batteries, because you can't do a lot of solar or a lot of wind without batteries, period. So that's the big bottleneck. You got to address that. You have to do megapack. And then if you want to do something with generation, it's way easier to scale solar than it is wind. Now, sure, Tesla with their advanced manufacturing technology could probably make wind turbines a lot cheaper than somebody like GE if they really set their mind to it, but it's just a low ROI effort, in my opinion, personally.
Hans, just to clarify, the older you get, you will see it's much easier to make wind as you get older.
I was wondering why you were smiling so much. I'm like, this guy's got a joke in his head.
You don't have to be old to realize that.
I wish we had like a soundboard, like a pa-dum psh that we could play. Producer wife, that's your job for next one. So it sounds like it's a solution that doesn't make a lot of sense from a cost perspective and a manufacturing perspective. Is that because of the current manufacturing practices and the logistics challenges that's the case? Or is it literally right within the like, is it one of those things where Tesla capitalizes on, which is extremely difficult problems that appear to be very stupid, that they go in and be like, hey, guess what? This is actually incredible. And y'all just didn't do the math to make it happen. And then the reason why I say that is why would Elon, why would he keep saying solar and wind as of late? He keeps saying solar and wind, you know?
Well, it is a good renewable source, but there's already, I mean, when he started Tesla, no one else was making electric cars. Like, we already have a bunch of companies that are making wind turbines that are good enough. Like, they may not be the best wind turbines ever.
There's a bunch of car companies making cars that are good enough,
but not sustainable energy cars. There's a huge difference. So like, wind turbines are already a sustainable energy technology. I don't think there's a whole lot of room to improve the efficiency of the wind turbines themselves. So unless, they can figure out a way to do wind turbines that are on a balloon that have a lot less infrastructure cost to get them high enough up in the air, which, that's a theory that's been thrown out a lot in the past, where you can reduce, like, you don't have to have the giant stand and the concrete and all that, but that has its own problems. I don't know. There are just a limited number of places for Tesla to improve the overall efficiency of what the wind turbine is, which is not to say that there's no opportunity, just limited. That's where I say that I think that most of the opportunity would be on the manufacturing side, just making it cheaper and maybe figuring out some ways in the logistics to, I mean, these things are huge. Like, just transporting the blades is an enormous, like, everything about it is a huge undertaking.
What if you make the factory where you would make the windmills, where you put the windmills, and just localize all that stuff?
Possibly, yeah. If they had some sort of mobile way to actually, make it and
You know,
put it
if
up.
transportation is going to be super cheap because of the semi and say the boats and stuff, and you're able to generate power locally with solar and wind, why not just plop down the factory where you're going to put the windmills or wind turbines?
Yeah, I mean,
I'm just speculating,
Yeah.
right? I'm just asking questions. I'm trying to learn. Yeah.
When we drive, Rodman's probably done this. If you go out to Palm Springs, there's like hundreds and thousands of these giant, as Hans has described, windmills that sometimes move. And Palm Springs has about 32 people there. But there's a lot of wind turbines. I'm exaggerating, of course. But there's a lot of wind turbines. It doesn't really seem to correlate. It seems like a lot of wind turbines to supply a very small population.
Oh, they're not supplying that population. All that is getting transmitted long distances. So that's the other thing. The place where you can generate the power is not the place where you're using the power. So then you have to set up all this remote. Like we've got tons of wind turbines here in Texas too. Usually they're out by Amarillo or Lubbock or the west part of the state where there's literally no people and there's tons of wind. But yeah, there's a lot of incentives from the federal government for utility companies to have sustainable generation as part of their portfolio, which is the only reason that those wind farms ever got set up in the first place, was because the only way that it made financial sense was for the federal government to incentivize it, which, that was probably a good move overall because we needed to accelerate the technological development of wind turbines. But yeah, these things don't pay for themselves. And there's a whole, all the stuff that we're talking about is the reason that they're not economical to set up. Whereas solar is already an economical form of generation without any sort of subsidies.
But isn't the reason why the wind turbine is so economically rough is because of those transmission losses and because you do have to, you have no real way. Like,
And
I guess what's
maintenance
going through
costs.
my
There's
mind
such
and
a
maintenance costs.
complex piece of machinery that they only have like a 7-year rated life. And so they don't pay back their initial CapEx investment over their rated life with the amount of electricity that they're generating. Or at least this was the case back in 2012. I used to work at a company that we made the utility cable that would link all the different wind turbines in a farm together. And that was the case when I kind of went deep in the weeds on wind back then.
And how would Megapack change the equation? Like how if you introduce Megapack and then you're able to actually harness the energy locally so that you don't have to like specialize this for like long transmission use cases. How does that change the equation? And say through manufacturing you're able to like solve the maintenance.
There's never enough local demand where a farm is for you to be able to use all of that power locally. Like you set up huge farms that are able to power small cities, but you set them up in places where the only town is, a few hundred people, a few thousand people, maybe. And so you're never going to use all of that wind power locally.
Okay.
It's always going to be transmitted somewhere else.
Okay. All right. That's fair enough.
My only thinking is, knowing Elon, he's like rethought everything from first principles, like from like the generation to like transmission, voltage changing. Like maybe he's rethinking some of that stuff and he has some formula that he's like, oh, this is a big enough opportunity, big enough market, and it fits with the mission that it's worthwhile. Like, I don't know, like the thing I'm thinking of is like, like how Dyson rethought the fan, right? So if there's something where they can harness power with like less moving pieces or something like that, maybe that's something that they've discovered. I mean, it's total speculation, but I imagine that if he's thinking about it, like he's not just building a non-reusable rocket, right? He's like doing something that's a true innovation that's a step change.
Well, yes and no. So, I mean, I would kind of push back a little bit there. Apart from FSD, there's nothing that Tesla has created that there wasn't already a proof of concept out there in the scientific community. Like Tesla is great at producing engineering breakthroughs to commercialize things that we know scientifically are possible from a physics standpoint. So like piezoelectrics would be another example. Like, how would you generate electricity from wind without having a big spinning rotor? There are a limited number of options for us to do that. Piezo is one of the foremost that I remember researching back in 2012 again. And yeah, very limited ability for that technology to be able to scale and generate meaningful electricity. So it's basically the same argument with batteries. Like, why is it so much more effective for Tesla to just go all in on scaling lithium ion battery production rather than develop solid state batteries? Because it's a commercially viable product that is on a massive cost curve, like Wright's law, cost decline, to be scalable not only from a technology standpoint but from a cost standpoint. And all these other technologies that are possible with wind are nowhere near, they're basically in the same bucket as solid state batteries as far as commercial viability.
Yeah.
Can you use solar power to run the electric motor that runs the turbine?
So the turbine doesn't, it gets powered by the wind. Like, it only spins because the wind is spinning it, and then that spinning is actually running a generator in the wind turbine that is generate, like, the wind turbine is not consuming any electricity. It is a pure producer of electricity when it's on.
It's like sending
Yeah.
a semi down the hill and then turning on the motors to regenerate the battery.
Exactly.
And that's exactly what I'm thinking. It's like if Tesla is building these amazing motors and maximizing the regen capability of a semi going downhill, right? That's the same kind of. I mean, it may be. It's not the same, but it's it could be in the same ballpark, right?
Yeah, Tesla 100% could make a wind turbine, and they would probably make one that would at least compete with, if not be superior to, existing wind turbines. It's just not a bottleneck, and there's not that much room for improvement. Like, anything they do there is going to have a much smaller impact on accelerating the world's transition to sustainable energy compared to other places where they can make much larger gains. It's like you're going to a tree where all the fruit has been picked like 70% of the way up the tree in an orchard where you've got trees all around you that haven't been picked at all. It's like, that's just not the tree to go get fruit off of.
Fair enough. So you and Matt Smith are on the same, because I try to pick both your brains on this because you both are very producer wife in the chat is like, don't mess with the ants. For anybody who gets that reference, shout out. I am a wizard. I'm never late. Or a wizard is never late. So okay. So here's the deal. If they come out with a wind turbine, I'm gonna make a shirt that says windmill, and then you have to wear it. Fair?
Oh, hey, 100%.
Okay,
all fair.
Done.
I would wear.
I'll ship it to you.
They don't even have to do that. You can make the shirt, and I'll still wear it right now. Today.
Okay, perfect. All
Actually, it should say "I make wind."
I make even better. We'll make two versions, and then we'll see which one, like, who likes the best one, and then we'll have you wear that one, and then Hans can wear that one. It'll be perfect.
So I say all of this today as a person who seriously investigated trying to run my house on wind power here in East Texas.
Okay, fair enough. Okay. Let's see what happens. Let's go ahead and pull up the 1-day chart for Tesla stock. So we're up 11%. We're up to 178 for the day. It's so weird. It's so weird.
I mean, we're up 11%. That's like insane.
Yeah. 2 days after earnings too. I mean, it really highlights just how beat up the. I mean, so look at Rivian. So on the right there, producer wife, you want to click on Rivian, RIVN, on the middle there. Perfect. So how's Rivian doing for the day? Is it a similar chart pattern? GM, can you click on GM? Let's see. Ford, right below it. Look at Ford. Okay. And then what's another? Let's look at Lucid. So on the upper right hand corner where it says quote lookup, oh, it's right there. Perfect. 12%. So I wonder if the EV sector. So I wonder if there's a big rotation into some of these like super beat up stocks from late last year, where folks maybe are seeing the writing on the wall and they're saying, okay, maybe the EV play is the right play. I don't know. I mean, I don't know shit about nothing. So
I think it generally
yeah.
runs, like in this industry, it runs if Tesla runs. If Tesla goes, then everybody follows. If Tesla drops, then the converse is true.
Yeah. Let's look at the demand, because one of the things we were talking about from the call was that Tesla was talking about how well their demand has been doing lately. So, producer wife, can you pull up the link from Matt Jung? It would have been let's see, the Tesla data.mattjung.net. Shout out Matt Jung. So this is a link that tracks Tesla's new inventory levels in the United States as well as used. I'd like to take a look at this live. So go ahead and pull that up, producer wife, when you get a chance. It's daily inventory. Okay, click on home on the upper right hand corner. And then let's click on, oh, we're just on Model Y. Okay, I'm sorry. Under new and existing inventory, which is the second section, click on Model Y for me. Perfect. Okay. So the big spike was the price drop, the price decrease. And it looks like we still are seeing steadily decreasing inventory, a little bit of a spike in the last couple of days. But there's still a downtrend. That was when, so when did they announce the $500 price increase? Was that Monday, Tuesday? I think it was Tuesday. Somebody in the comments correct me if I'm wrong. I believe it was I believe it was a day before earnings or 2 days before earnings. It was sometime this week.
I believe it was Tuesday.
Tuesday. And so if you hover over that dot, what date is that? Is that 125? This one on the left? 126. Okay. So there may have been a little bit of a spike in inventories because of that price increase of $500, but there's still an overall downtrend even from before. So go back to home and then click on Model 3. New inventory. Okay. So you had the price decrease with a big spike down, and now there is a increase since January 18th, babe. If you go back to the bottom there, what is that? 18th, 17th, yeah. So there's been a steady increase in inventory in Model 3. Click on Home again and go to Model S. Steady as she goes. Okay, so it looks like they've probably reached an equilibrium with like supply and demand for that car in the US. I speaking from like, this is something I used to do in my previous life. Like, put a price strategy in and see how everything works. So it looks like Model S is actually probably where they want it. They want some stock in house and they want it to kind of be in equilibrium. So that's good. So click on Home and go to Model X. Okay, increasing. So that guy probably needs a price decrease, or needs some sort of incentive. Actually, it's up to 400, which is around the same level as Model S. Okay, so maybe Model X was depleted in relation to Model S. All right, we'll see how that one evolves. But the Model 3 one is interesting. So if you go back to Model 3, yeah, I'm curious how this is gonna sort of balance out in the next few weeks if they have it where they want it. They still, the key thing to remember here is that they still want some sort of inventory in house. They don't want to be at the bottom because that means customer wait times. That means people are not going to be able to get their car right away. So you want some sort of inventory in house, and
no test drives either. Like you have to have
Exactly.
inventory in your sales locations for people to do test drives. It's really an interesting spot because in order to get that Model Y long range under to where consumers can get the EV tax credit, like it has to be so low. It's almost like the Model Y long range demand lever that they have is binary. It's either on or off, and on is like insane demand and off is like not much demand. And so I think what you're going to see, if I had to guess, is they'll leave it under, and they'll just let the wait time for the Model Y end up being the thing that pushes people more towards Model 3. Just like I don't see what other, because they can't go above the EV incentive and then back below it and above it and below it to manage the wait time on that, because the optics around having price swings that are that wild would be awful. Like customer pushback on, hey, I bought it above and then you just change it back below, like that's not going to work. So yeah, it's kind of a tough spot that they're in to manage their wait time without, the other lever that they have is just massively ramp up their ability to produce Model Y long range out of Giga Austin. And
Yeah.
I'm sure they're pedal to the metal on that one.
And I noticed on those charts, the x-axis, the numbers were different, so it gave you kind of like a different view. So I think what I saw was the Y and the 3 have about the same inventory, about 400 units each. Even though when we looked at the chart, one took a big dump and one did not. Am I correct? About 400 for both?
I think Y is less than 400. So Model 3 is around 450. So go back to Model Y. 200, 250.
Okay.
And while we're on here, Robert, you can see that there's a cup with a handle. Oh, sorry, Richard.
Board hand, come on.
My friends call me Robert. Oh
really? I'm glad we're friends then. But there's a perfect cup with handle, right? And it shoots right up there, right?
Oh yeah, sure. Yeah. No, that's you know exactly what's going to happen. I mean, if that's the case, that's a bad sign.
No, it's a good. Yeah, that's right.
Tesla inventory levels to the moon, guys.
Yeah, not good. We definitely don't want that. Go ahead and pull up that link I sent you, producer wife, for the Tesla home screen. There is something interesting though. I don't know if this was here before. Model 3, Lisa's starting at $399 per month. Is it the first time they've done this?
Yeah, that's new. Someone retweeted, like the demo drive appeared and the lease price right there.
Okay. Go ahead and click on Model 3 at the top.
And that's just in the last day.
There it is. Schedule a demo drive. Click on that. Let's see what it does. Okay. So you can schedule one. You can go test it out. So they are trying to push Model 3. I mean, it's which is good. Which tells me then is maybe that 400 unit level is kind of where they want it. 400 units in inventory across the United States. And depending, how many service centers does Tesla have in the US? 300? 150? Something like that? Probably like 150, right? 50 states, there's probably 2 to 3 per state, 150 on average, call it. And then so 400 divided by 150 is what? Like, no, that's not enough. That's like 2 to 3 Teslas per service center. That's not enough. Interesting. But they're trying to keep their days in inventory low. Yeah. So you guys feel like, I mean, the message that I get, let me just kind of get my brain out and then I'll pass it around, is that Tesla is very much on the warpath to destroy every other automaker from a pricing standpoint. So that's the clear strategy for 2023. And they talked about this on the call. Price matters, right? Elon Musk himself said price matters. So we're going to pull every lever we can that's humanly possible to try and flood the market with Tesla so that our production lines up with the demand. And the fact that they don't have a dealership network, I think in 2023 is going to become a gigantic advantage because you remove any barriers between the customer and the company to purchase a car. Whereas now, I've been really trying to research the state of the auto market, the dealership networks, legacy auto. And because of the sort of, the rate hikes and, the slowdown that we're going into, I think a lot of the things I'm seeing is the legacy auto industry is having a really tough time selling cars because of multiple reasons. But the dealership network's one of them. It looks like there's a lot of dealerships out there that purchase inventory on loans, on debt. And now, because of deflation, partly because of Tesla's price cuts, now a lot of these dealers are underwater with some of the stock that they have. And so they're unwilling to lower the prices too much because that means selling at a big loss. And whoever does that at a dealership, is going to get fired. Or, or it's worse, they might actually go out of business because they've taken a gigantic loss on those loans. So how is that going to play out over time? For 2023, how Tesla at 2 million cars per year globally is going to be So the US will probably get, say, 800,000 of that, call it. The auto market in the US is probably going to be somewhere around 13 million. 10% of 13 is 1.3. So Tesla's going to be about 6% of the total US market in 2023. That's significant. That's a pretty big deal. And so, because really, who's the biggest seller in the US? Probably Toyota, or Volkswagen or something, right? Or Ford, and they have what? They sell how many million units in the US? Probably like 2 or 3 million per year or something like that. So they're already half the size of Toyota-ish in the US, just from a pure unit perspective. So you have you can dictate pricing in that manner. So if Tesla says, okay, guess what? I'm undercutting everybody now, and I'm going to flood the market with Teslas, everybody else is going to have to react. And when you have a dealership network in the middle that, I don't know any dealership folks, and if there's anybody in the comment section that's part of the dealership network, I don't mean to say this to offend you, but I've never had a good experience at a dealership. It's always a battle to try and get a good deal. And then when you haggle the price, you have to sit there for 2 hours to wait for paperwork. And then you always leave like you got ripped off. So it's like, okay, how is that going to work in an environment where you have an automaker that's just like, this is the price. It's better than most people. You can take it if you want. Oh, and by the way, the car is awesome. It seems like a winning formula in this environment. What do you guys think?
I was going to say that I forgot to mention this. The Toyota, that's kind of what I'd heard was the straw that broke the camel's back. When Tesla was going full volume but could still do 20%, then Toyota kind of lost their, where are we? We do full volume, and we can't make money. We can't make money doing that. And I think that was the breaking point.
Yeah. Any other thoughts there, Ottoman or Hans? Uh-oh. Anybody
You're
know?
muted, Rodman.
My shortcut keys aren't working. Looks like GM just topped out Toyota. I sent a link in the private chat, but yeah, looks like.
What does it say in the text there?
There's a chart like one page down. Little graph, sorry. So it looks like GM just edged out Toyota this year.
So GM in the 2022 in the US is going to sold a little bit over 2 million cars. Toyota sold about 2 million. Ford a little bit under 2 million. Stellantis 1 point. Okay.
So yeah, you can see the gray bars are last year and the blue bars this year.
So GM grew year over year. That was one stat that we saw. I think 4% year over year they grew globally. So good for them. I'm telling you, man, Mary's leading. Don't let anybody tell you she's not.
What amount of that is electric? Like 43 cars?
Yeah, very, very, very little. But this is eye-opening because I think tracking this for the rest of the year is going to be fascinating to see. Yeah, 8% drop in car sales 2022 versus 2021. 15 million forecast for 2023. So they think the car market's going to grow 1 million cars year over year. There's no way. Do you guys think that's possible? The car market in 2023, 15 million, when everything's like at a standstill and the economy's like shrinking?
Only if there's no recession. Only if there's no recession.
I mean,
that's concerning to see.
Like the price drops with Tesla, like if you just put that across the whole market, like we've already seen shrinking, right? Everyone shrank last year except for GM, which just barely grew, right? To say that it's gonna like suddenly change course, like it requires some major change at like the Fed level, and yeah, I don't know, I don't see it.
Hans, go ahead.
I think, the comment that Elon made about insurance pricing, how when Tesla offers competitive rates in insurance, that has a cascading effect on the prices that other insurance companies are able to charge, also is relevant to the car market, that Tesla being at the level of volume that they are at the prices that they're offering puts a lot of pressure on the rest of the auto company. And so, that's, demand issue is a concern for the overall auto industry. And Tesla has moved to say, hey, we have the ability to capture all the demand that we can supply. Everybody else, I don't know. Like, that's up to them.
Yeah. Shout out to the 1,000 people watching, by the way. Thank you very much for joining us today. Throw us a like if you're enjoying the content. YouTube. What topic do you guys want to hit before we get into some Q&A in 15, 20 minutes? Is there anything you guys want to talk about?
The two factories, like I said, the two factories, I mean, I think one will be announced in March, my guess. I don't know what else is going to be announced. The commercial application that he alluded to at the earnings call, I thought that was interesting what those products could be. I was thinking, like, could it be like an electric hoverboard like Back to the Future? Could it,
I heard Van when he was saying that.
Yeah. And then the other thing was that the reference that they're going to have more capacity for the 4680s than just for the semis, and they kind of left that hanging out there without kind of addressing that, but it suggested some other use that was positive information, although a little vague.
Yeah. What? Go ahead, Hans, please.
Yeah, I think that one is specifically interesting, assuming that they're going to be high nickel 4680s. I mean, we don't know that for sure. That could be that they're going to have some lower energy density 4680s as well. But if you do assume that it's higher energy density cells, then you are talking about getting into things like vans, things like potentially boats or other, the lower end of the car market is almost certainly going to use purely LFP. And so the use cases for high energy density 4680s is limited. And then the other thing, based on how much of the factory footprint is going to expand to supply those 100 gigawatt hours of batteries, that means that they are gung-ho on DBE technology being used for both cathode and anode, which we know from Jordan and the limiting factor that currently they're only using it for, I think, the anode, but not the cathode. I can't ever remember which one. But yeah, so in order for them to achieve 100 gigawatt hours, it just means that they have a lot of confidence in the place that they're at with the ramp of the 4680, that they will be able to use DBE for both, and that their ramp in Austin is on track to achieve the long-term goals that they set for themselves.
So do any of you know like what the approximate cost of Austin was or Berlin? Like it's like in the so that's interesting because it's like kind of below, somewhere between 2 and 3, right? And then when they announced the expansion of Nevada, it's $3.5 billion, right? So like something doesn't add up there, and it's like more than half built. It's like 2/3 built, or maybe like 3/5 built. But like for that 2/5 that's left, what's going in there that's 3.4 billion? And that's kind of what kind of piqued my interest. I don't know if anyone has any thoughts about that.
That's an interesting thought. Yeah. So it's like the density. There's got to be more stuff in there. I mean, the shell. Really, when it comes to like building something out, the 3.6 billion or 2.6 billion is not really the building or the land. It's the stuff in the building. The building and the land is relatively cheap compared to everything else. So one could make the assumption that whatever machinery or I don't know, technology they're putting in that building is way more dense than your typical factory is for Tesla. I mean, a $3.6 billion project for GM is probably a 1 million square foot facility that's incredibly inefficient, right? But for Tesla, a 3.6 billion facility is an incredibly densely packed technological marvel, whatever you want to call it, right? Go ahead. Yeah.
I was going to say, I also think all in that Berlin was a lot more than that. Because I remember hearing numbers that maybe the construction cost was, and I think maybe what Farzad was saying, maybe the construction cost is X, but to deliver the factory in working order, it might be X plus 3-4 billion. So I think maybe that the 3.6 billion for the Nevada, maybe that includes all in, not just construction, but all in. And maybe the all in part is the expensive part everywhere, all the interior robots and everything.
Yeah. Yeah, I think it's a great question, and They did make a highlight where they said when they were unveiling the Nevada factory, they were pointing at the 4680 new section. They're like, look at how small this is in comparison to the other thing we built. I'm like, huh, yeah, you're right. And it's supposed to pump out 3 times the amount of capacity for 1/5 of square footage.
Yeah, it's like
Is that the right
it's
math?
100 megawatts versus 40 megawatts. So the existing
Oh.
thing is barely 40 megawatts, and this new section will be over 100. Which is
2.5x.
Isn't the
Yeah.
Lathrop location tiny also, though? Isn't it
Yeah,
really
it's not that
small?
big.
But they're not making batteries there. They're
Megapacks.
taking external batteries by other suppliers and assembling them into megapacks. So yeah, there's a little bit of a difference there.
It's basically a cabinet manufacturer. That's really what that facility is. You don't need that much space for that. There was one when I was speaking with Matt on the mega stream we had on Wednesday. It seems like they're building one of those every hour. It sounds like I could be wrong, but a mega pack an hour or so, or maybe a couple a day. I forget what the stat was. But if you really think about it, for that type of, you don't need that much room, man. It's just like you're literally just taking a freaking closet and you're stuffing some batteries in there. You're putting some wires. You put it in a truck and you deliver it, and they're charged $2 million for each of those freaking closets. It's wild. It's wild stuff.
Sounds like you'd
Really
also
is.
could do all that with robots.
You could.
Does anyone know how many gigawatt hours of battery production Giga Austin and Giga Berlin are rated for? Because that might also tell you a lot. Like, if they're rated for lower amounts, and then we've got 100 in Nevada, that might be the thing that would tell you why it's so much more expensive there. If they're, if it's 2 or 3 or 4 times the number of lines. But yeah, that's definitely something I'm going to look into after the stream today. The other thing that I was going to say is it is a little bit confusing that they're putting that in Nevada after all the trouble that they've had hiring labor. And so maybe it's a signal that, hey, we think the economy is going to be that bad to where there's going to be a surplus of labor in the country looking for work, and we can attract them to the middle of nowhere in Nevada to do the things that we need to do. I mean, those are advanced jobs. Like, that's not going to be simple labor.
Or they think, or they're banking on being able to heavily automate it, and by the time they're able to attract the talent, they're going to be able to get to 100 gigawatt hours or whatever that number is. I don't know. I could be wrong, but that's a great point, because you're right that region was they had a lot of struggles hiring the workforce they have now. Unless they're planning of building out a bunch of stuff around it too. Like maybe they're going to make it into this awesome place to go live, but that's going to.
It was only 3. I think they only said 3,000 jobs. So I mean,
that's
right.
It's
not an incredible number. So
yeah, additional. Should we do a little bit of an extended Q&A for the last, say, 20-30 minutes?
I did just want to make one more point before we transition to Q&A, and that was the other big thing that stood out to me on the earnings call was Zach saying that the business and management are going to be focused on managing the business for operating margins moving forward.
Yeah.
I think that is huge for a couple of reasons. Obviously, it signals that they expect growth in other areas of the business compared to auto. But the other thing to me is I think we just need to reiterate to investors to set expectations that Tesla is not going to be growing earnings at the rate that the most optimistic people in the community hope that they will or expect that they will, at least on any other part of the business besides FSD and software revenue. That, like Elon said, affordability really matters. And so they're going to put the pedal to the metal on growing massive scale. This, master plan part 3, they want to get the most number of sustainable energy products into the market possible. You do that by bringing costs as low as you can manage while still running a healthy business. And they're going to do that by managing their entire company mix, both automotive and any new products, to operate in, we'll say the 15 to 20% operating margin range for the foreseeable future. But that means that, yes, they if you look at it from an analyst standpoint, that analysts' volume expectations are probably low, and maybe analysts' margin expectations are high. Net, it's going to be an insane level of just pure dollar profits, but maybe shifted more towards volume and less towards margins.
Yeah. Where do you think they'll come in at 2023? Have you any of you guys done any sort of work to see where you think the numbers will come in for 2023, like earnings wise?
I just let Matt do my thinking there. Sorry.
Yeah, he does a great job. I just plugged them into my model here. Let me actually have producer wife pull it up just so. I like throwing these numbers out there because it's a place for me to see how wrong I am over time. It's really fun, and then it gives content for other people to shit on me. It's great. So go ahead and pull up that link, producer wife, when you get a chance. So I have Q1, Q2, Q3, Q4 by quarter. Go to the second tab where it says earnings at the bottom there. Perfect. And yeah, so for full year 2023 on the bottom right hand corner, I have them coming in at $16.8 billion in earnings. And that's sort of the quarterly breakdown that I have, Q1 through Q4. If you scroll down a little bit, babe, I have auto margins coming in at 22% in Q1, 23% in Q2, 24% in Q3, and then back to 25.3% in Q4 as Berlin and Austin ramp, and some an additional FSD adoption, probably not a lot, but a little bit. That margin increase is mostly going to be from economies of scale, really. And then energy gross margin. So last quarter in Q4, it came in at 12, and the quarter before that was 9. And so I'm kind of expecting a similar level of increases from a energy gross margin percentage as Lathrop ramps and more of that Megapack 2 comes through, which should be at a much better cost structure. And if you scroll up to the top, babe, producer wife, everybody, row number 8 on the energy, I have Q1 coming in at 1.65 billion, which is about 300 billion more than Q1, or 300 million more than Q1. And then I have it sort of steadily increasing by about that amount each quarter as they ramp up to 2.6 billion, which is double Q1. And so I'm using that, basing it on the sort of feedback that we were getting from the call that said that energy is growing faster than the car business. I don't know by how much faster. Now, if this grows at 60% instead of 50%, it's still not going to be that big of a material impact to earnings because it'll go from, being $1 billion to $500 million or something. But it'll be interesting to track that as the quarter goes along. And then the reg credits for the cars, which is row 5, I still have them in for 2023 because they came in at 450 in Q4. There's a lot of reg credits coming in. The one thing I'm struggling with is I don't know how to model. Well, I mean, Zach did say there's going to be about $150 to $250 million of credits coming through because of the IRA, which I'm kind of not taking off from COGS, because that's how I would kind of do it. Is it'll be like a credit, like a savings of sorts. But I still gotta pick Matt's brain on that a little bit more. But that's kind of where I have it at. And 16.8 billion for 2023. What was 2022's full year? You guys remember? See if I can pull it up. 2022 full year was 14.72. No, I'm sorry. 12.5. 14 non-GAAP. Oh, actually, it will be GAAP, right? Because this is all GAAP. 12.5. So it would be about a increase of 16 on 12 is what? 30%? Yeah, 33%. So it'd be a 33% growth in earnings. Anyway, that's where my numbers are at. I don't know if you guys have any.
What's your total number of sale units for the year?
Yeah, scroll down a little bit. So can you so 450 plus 480, it's 2 million. Yeah, I have it at 2 million.
And does it
the
make
ASPs are in row 60.
Does it make a difference which factories are producing that 2 million? I mean, is it...
So I don't go factory by factory. What I try to do is I try to say, okay, this is where I think Tesla's cost savings are going to come in on the whole as they scale up Berlin and Austin. And I'm going to assume some sort of increase in margin quarter over quarter. The person that does it much more diligently from that perspective is Matt Smith, for sure, because he goes by model by factory, and it's like, okay, I think I can make this margin percent on this model at this factory. But I take it more like at a high level and say, okay, this is where I think directionally the margins are going to go. But I have 2 million for the year. Go ahead, Hans.
I was just gonna also shout out Steven at I cannot underscore enough.
Yes.
He does also a similar, very granular bottoms up model.
Fantastic work he does. Yeah. Yeah, those two guys are way better at it than I am. Actually, we shouldn't even be looking at this. Take it off the screen. Yeah, Hans, did you have any other points there? I know you were going on a...
That was, I'm done with the operating margins thing. I would say that based on the research that we've seen on Megapack from Zero Sum over the past month, I think that there's a lot of upside on your margin assumptions there that are potential. I don't know, where the 50 over underline would be on that.
Yeah. It's going to be interesting to track, but I still think for the next year or two, it's still not going to be that big of an impact to earnings. It all depends how will the market price this in for the future. So if the market says, okay, I can clearly see that this business is growing more than 50% year over year, and it's going to continue to do so for the next 5 years, and your target margin for this business is 50%, then, if it's 2.6 billion in 23, then 50%, let's say, 50% on that is another, 3 what is that? What's the math on that? Like 3.4, right? And you just keep going up. You go to 5, then you go to 7.5, and then you go to 10, and you just keep going up the ladder that way. And then once you get to a $10 billion business at 50% margin, that's 5 billion additional per year to net income. And then if you times that by a PE of, I don't know, 20, that's an additional $100 billion market cap. Right. So, and if you do a DCF on that, then you just arrive to some sort of price level to the current, but it's still small compared to the auto business. So that's the thing, even if you do that math. So unless it grows like at 100%, if it grows at 100%, it's a different story. Then you go from 2.6 to 5 to 10 to 20 to 40 in 5 years. And then a 20 multiple on 40 billion is all of a sudden $800 billion, $800 billion market cap. The math changes. So that growth rate on the energy business is going to be fascinating to watch. And what makes it interesting, I'll give you the mic here in a second. I'm sorry, Hans. Let me just finish this out. Because they are closets in a factory, you would think that they're capacity constrained from the battery perspective. Why wouldn't they be able to crank out a ridiculous amount of closets out of this factory? Why wouldn't they? It's not that hard. At least I don't think, just conceptually speaking. You just stick a bunch of batteries in a place, you hook them up to a wire, you put them on a truck, and you go. And you own your trucking. You own your flatbeds. You own the semi. You're taking the cost out completely, and you own the logistics. So you don't have to wait on timing from a freaking Black Horse or a Old Dominion or a UPS or a FedEx or whoever other company you choose to do. You're 100% vertically integrated for that entire side of the business. So why wouldn't you be able to ramp super fast? There's no complexity. Sorry, go ahead.
Yeah, I was just going to say that the Lathrop factory having a 40 gigawatt hour rated capacity and then installing, what was it, 6.5 last year. So that's over a 6x increase just for them to reach rated capacity. So, it's hard to say over what time period they will see that sort of ramp, but that's one of the reasons to think that they are going to grow faster than that 100%, at least for a short period of time.
Sure. Raman, go ahead. Uh-oh. They're hotkeys, bro. They're broken.
Yeah, the hotkeys. I'm clicked on the wrong spot. This popped up in chat, and it's also on Twitter. Lucid apparently stopped trading on rumors that the Saudi private investment fund is buying out Lucid.
Not surprised.
So what does that mean? I mean, I think the reasoning is...
Not surprised.
I mean, my first thought is clearly it's a reaction to Tesla dropping prices. Like who's buying a Lucid if a Model S just drops?
I have
20
a
grand.
Yeah, I have a different take on that.
Sure.
I sued Lucid. I think their management are not truthful, and that's been from the start. And I think that's reflective of where they are now. And I think it was always the case. I believe that the Saudis would move this to Saudi Arabia because it makes perfect sense to diversify away from oil. Start your own electric in Saudi Arabia. And the high end, it makes more sense that the Lucid is kind of a higher end because it would serve that class in Saudi Arabia. So I think it's been a setup from the beginning.
It's a perfect Saudi vehicle. I 100% agree with you. I saw so many sort of, a lot of folks, were expecting Lucid to go bankrupt. And I'm like, there's just no way. It's much more up 40%. Yeah, and I just saw I was on Seeking Alpha as well. Lucid stock jumps amid Saudi Arabia fund takeover speculation. I wouldn't be surprised at all. It's the perfect car for that market. Listen, I saw one in person a couple of days ago when we went to the gym. It looks freaking nice, man. That's a nice looking car, but it's not a high volume, profitable car. It's gonna be very nichey. It's gonna be like a Maserati competitor, or like a down market Rolls Royce competitor. Jesus.
Well, their problem is they can't produce, so they need to completely redo their production line and get rid of existing management. And that's probably what they're going to do.
Well, they can produce; they just can't sell now.
No, right? They literally can't produce.
Both.
If you go back to the original estimates of production, their original estimates were even after they reduced them, they were 20,000 in 22, and they didn't. That was deliveries, and at the end they produced like 6,000. So that wasn't even deliveries. So
even with these diminished production, they have, I think they delivered basically half of what they produced in Q4. So like they're sitting on half their inventory is unsold, at least at some point. And part of
that also was production. They couldn't get certain parts. So they would have basically almost nearly completed vehicles, but missing like one or two parts, and they couldn't sell them or deliver them.
That's crazy.
Yeah,
it's hard.
I mean, it's again a reinforcement to sort of what Tesla has been able to do. And yet another tip of the cap to the Tesla team that says, "Yep, what you guys are doing is not as easy as it sounds, is it?" This is just it just feels like the beginning. It really feels like the beginning. There are things now falling into motion that I think folks have been speculating about that would happen because of the disruption. Like, we haven't seen the disruption yet. We actually haven't seen the disruption if you really think about it. What we've seen is the entrant start making waves. But now that the entrant that's disruptive is disrupting at scale, now is when we should start seeing those dominoes fall where we think they will. So you have, it just becomes obvious that there's really only two players globally, maybe. Tesla for sure, BYD perhaps. We still got to see. BYD hasn't had a competitor from a price perspective before either. Like, that's another thing we have to keep in mind. And half of their volume is hybrids. So what happens now when your prime competitor, quote unquote, actually goes down to your pricing level and says, "What's up, buddy? How's it going?" Who's really the competitor here?
I mean, that's a great point, because if you're competing with their hybrids, right, suddenly they had a cash cow. And if
exactly.
I haven't seen what the pricing is of the hybrids, but like if Tesla is within striking distance of that stuff, right, maybe that really changes the game of like what the math looks like for BYD.
Mm-hmm.
And they're relying on those hybrids to pull them through. So
I always thought BYD was what was the basically the backstop for Tesla's existence in China. That BYD's expansion across the world made Tesla kind of safe in China, because if China did anything to interfere with Tesla, they would lose the ability to have all their companies sell cars internationally. So I always think BYD is kind of a protection for Tesla. And BYD is not the only, like, there's three companies that are kind of in the forefront of Chinese EVs besides BYD, XPeng, NIO, and Li. And Li also has like a mix of hybrid and electric, and it's questionable whether they could survive ultimately. So it may be the case that even those companies aren't able to survive, other than BYD and probably NIO. I think NIO is kind of a favorite of the Chinese government too.
I think the argument that we make all the time about it not really being EVs versus EVs, but EVs versus gas cars holds true also in the reverse direction for BYD. That yes, like Tesla may be able to outcompete them on a pure BEV low cost volume product, but I think a BYD produced even hybrid is probably still going to outcompete pretty much anyone else besides Tesla, and there's still so much market left to take there that they've still got a lot of runway ahead of them. It is, long term, it is a concern, but I don't see that as being a near to midterm concern for them. They've got some time to figure it out.
Yeah. Anything else before Q&A? Q&A. Let's do it up. Producer wife, only bring up the best ones, which will be all of them, because we have the best community ever. Thank you so much for joining us. Cash King, why is Lucid up so much? Because the Saudis are buying them, is the rumor. And we don't know for how much yet. The news just broke, but we're waiting for more information. It broke about 15 minutes ago.
They're paying $3.49, I heard. That was the price.
Total. Yeah, because that's probably how much they're worth. Yeah, so we're waiting to hear more, but if there's more news that come through, we'll break it live. But yeah, it sounds like the Saudi will take them private at a certain whatever price, which means Lucid will no longer be public, and they'll have literally unlimited cash to stay alive forever. So that's why. Thank you for the question, Cash King. Let's do the next one. Joey, question: do you think Tesla will buy up legacy auto factories once they start to go under? No. I don't think so. The factories are not really optimized for the proper flow of product that Tesla's looking for. They're very the buildings are very, very broken up, and they're optimized for gas car factories, not optimized for an EV factory, which can be way simpler. It would just be literally you're just buying something you're going to tear down anyway. So I do not see that happening.
Could Tesla buy Lucid's Arizona factory or the footprint?
I don't think Lucid would ever get rid of it, but if the shell is conducive to them getting in and going quickly, they might. But it's not that big of a factory, though, is it? It's like not even 1 million square foot. Nah.
No, I think maximum capacity is like 90,000 fully built out.
No use. You're better off just building your own. Yeah. Okay. Next one. Thank you, Joey. James, Farzad, I love James. James, dude, he's on my comments, and he always ends his comments with giddy up. Shout out, James. I love him so much. Question, which OEM do you think will go bankrupt in the next 2 years? Giddy up! In the next 2 years. In the next 2 years.
GM has a shitload of debt. That's all I got to say.
GM or Volkswagen?
Stellantis. Stellantis is my pick.
I keep forgetting about Stellantis. Dude, I just forget about it even exists. Yes, I agree.
It's a terrible name, by the way. It's a terrible name.
It's Chrysler in my head still to this day. I can't call him Stellantis, you know?
But Jeep has a Jeep that qualifies for the $80,000. Yes. It's like ridiculous.
Yeah. It's great. The Jeep Wrangler 4XC with 20 miles per gallon, 21 miles of range qualifies. So obviously they're fine.
Yeah.
So Stellantis or GM, if I were to guess, or Volkswagen, those three.
Or maybe they'll combine. Maybe Stellantis and GM will combine.
It is time for consolidation. If I'm these automakers, I'm starting to think consolidation quickly, and try to avoid bankruptcy in any way possible by doing that, which means mass layoffs and factory shutdowns. So the economy will be impacted negatively by this for sure.
Which we're already seeing.
We'll see. Which we're already seeing, exactly. Hans, did you have a guess?
I think I would go with Stellantis too, but it is just to get it's such the thing that I can never wrap my head around is what role are government bailouts going to play in this whole thing, and who's closest. And Stellantis is connected to governments, GM is connected to governments. Ford is not so connected to the government, but they've also proven that they're the most nimble of all these legacy OEMs. Man, Volkswagen, I don't know. Volkswagen might be the one that stands out the most to me, just with, I mean, I don't know what leg they have to stand on moving forward. I'd be scared if I was them.
It also might correlate to when we are in the election cycle and who's running and or who won and what their affiliation is with the UAW and all those things.
That dude, I'm so fascinated to see what happens with the UAW this election cycle, because GM, Ford, Stellantis, these guys are going to have a rough couple of years, and they're going to try to lay off workforce because they won't not be able to stay alive. So how's that going to influence the election? Well, I mean, that's going to become a huge topic of discussion here in the next few months. Can you believe the election is next year already? Can you believe that? Insane. Where have we been? Oh yeah, COVID. Next one. From Gerard. Thank you very much for the question. How many Cybertrucks produced in 2024 after production ramp? Ooh. So we got a warning sign, a warning sort of from Elon that says, do not expect any volumes for 2023. It was going to be very low. So I'm like, I have 1,000 in my head for 2023. And I will not be one of those 1,000 probably. Sad face. But I'm going to say 50,000.
50, wow. Yeah, I ran that poll on Twitter, and a lot of the guesses, like the majority of the guess was like in the sub 50. So I'm thinking like conservatively 20.
Okay.
Optimally 50 would be great.
Hans?
I don't know. Like, I think that they can ramp up fairly quickly with this product. It's a lot of batteries though. I would give it the over on 50 though.
Really?
Yeah, I think I would. I mean, just think about how fast production ramped in Shanghai. And I know it's it's a much bigger product.
New platform. No paint shop.
Yeah, but no paint. Exactly. Like, they've learned so many things from all those lessons.
Castings.
I would caveat this. If they can really ramp 4680 supply, I think they can do it. I think they can get more than 50,000. I would say in the 50 to 75,000 range in 2024.
Okay. Robert, sorry. Go ahead.
Yeah, I will do. I think they'll do about 6,000 in 2023, 1,000 in September, 1,000 September, October, 2,000 November, 3,000 December, and 50 to 100,000 in 2024. If they can get to 5,000 done properly by the end of 2023, I think they will do substantially more than 50,000 in 2024.
Oh, I just realized that we're talking about 2024 versus 2023. Yeah, that's a different question.
Oh, yeah. You had 10,000 for 23 then. Or 20,000 for 23. Okay.
Yeah. Yeah,
So
for 2024. Oh, my God. I mean, and everything is exactly like what Hans is saying. You have a much simplified process for putting this vehicle together. I mean, it's stainless steel that's bent, right? You don't have stamping, so you're eliminating that. You're eliminating paint, which is another huge bottleneck. So yeah, this is, I mean, hopefully they're really in it to win it, and then we see like another place pop up where they can do more Cybertrucks in the US. So
the thing that they bragged about too on the call was manufacturing technology. Like we're gonna have, okay, prove it, let's see it. So where's your head then, like number wise? Give us a number. Come on.
I want 200 at least.
What? 200,000?
Yeah.
I think they might hit a run rate in the upper hundreds and some by the end of the year. I do not expect 200 delivery or production in 2024.
Yeah, I think a max of 100. A max of 100.
Dude, if you nail this,
2024. Yeah, I don't know.
Yeah. If you nail this, you're going to be a legend.
Listen, if they do 100,000 Cybertrucks in 2024, let's take
That'd be
that.
really good.
Let's take that profit.
Yeah.
Yeah. I just think there's such a huge backlog of like orders. Like, like they need to ramp that shit. Like, I mean, it, like, if this is everything that like I want it to be, like as far as like reducing costs and like making a really optimized vehicle, like they need to get this out. They need to show that they can manufacture the hell out of that thing.
Yeah.
I would not be surprised if target capacity in Austin is 500,000 Cybertrucks per year. And so I do think they need to be on a run rate that is a significant way towards 500,000 vehicles per year at the end of 2024. Yeah. So, I mean, like I said, I could definitely see a run rate close to 200,000 by the end of the year.
The second question that producer wife brought up there is, thank you, Gerard, for the question. If you can go back to the backlog. I mean, that's really the question.
It's not, the production ramp will be all the way through 2024. They'll still be ramping at the end of 2024. It'll, look at how long it took them to ramp up Shanghai from initial, it's going to be a while.
Yeah, it's all in the batteries, right?
Yeah,
it's going to be battery limited, and seeing them throw up like 40. I mean, I guess we could do calculations later, but like that 40 gigawatts from in Nevada, and then maybe other people are coming online. LG, other people are ramping up 4680s. They're supposed to be hitting in 2024, maybe 2025.
Yeah.
Yeah.
What's interesting about the backlog, though, for Cybertruck is Model 3 had a 500,000 car backlog by the time they launched it. And the run rate for Model 3 per year is somewhere around that number right now. It's about 500,000 Model 3s per year. Model Y is a little bit more. I think Model Y is like maybe 700. And then so 500 times 700 plus 700 is 1.2. And then you add an S and X, gets you closer to 1.3. So it's like somewhere around there. So if that trend continues for Cybertruck with their 1.5 million rumored, if that's true, reservations, but it was also $100 versus the Model 3's $1,000, right? Okay, so you got to take that down. Okay, never mind. Just I'm an idiot, but that's going to take forever to go through. That's really the lesson we're learning here. Unless they they crank these suckers out like crazy. Because if the 1.5 million backlog really holds true and their max capacity is 250,000 per year, that will take at least 6 years to go through. I don't think that's acceptable.
And that presumes it doesn't become the featured product in the whole line.
Right. Crazy implications. Let's do a couple more if we can. I think it's Stefan Beddard. Media Cafe Online LLC. Very official name. Thank you very much for the question. Would like to hear discussion about FSD level 2345, autonomy, robotaxi, and hardware 3.4. What will likely require hardware 4? Fascinating question. So one of my takeaways from the earnings call, not takeaways, but this is now I'm starting to be in like a little bit of a gray camp. Is like, I'm not so sure hardware 3 is going to be able to do robotaxi.
I think it will.
Right? Okay.
I would agree with Rodman, but not immediately. I think that they will have to solve robotaxi all the way with 4, and then eventually they can simplify the software and be able to backload it into hardware 3.
Got it.
I thought from the call it was unclear. I'm near Farzad's camp. I thought it was a little more unclear.
I think a little bit of maybe it would be helpful to know, like if Tesla came out and said, so we expect, I mean, he's been doing that forever, I guess, is that we expect to be finished, feature complete by blah. But then what is the strategy? Level 4 will be our test run robotaxi hardware platform. And, once we feel confident that this will solve it, then we're going to be able to put it in hardware 3. Have they had any verbiage around that or no? Did I miss that? Or are we okay? So that would be helpful.
I mean, I guess the only thing, when I went back and listened, he was talking to Pierre Ferragu right before that, and he was saying, and Elon was saying that like that the margins from FSD. I mean, I guess he didn't really spell out.
It doesn't say
robotaxi
robotaxi
right
though.
there.
That's the thing, right?
Yeah.
Because there's a big separation, and I think maybe this is what that helps. Maybe this will help the Tesla community. I think a full self-driving car that is not a robotaxi is still a giant margin bomb, meaning that it's still people will buy the Tesla because they don't have to drive, and it'll add thousands of dollars of margin per year easily. But then the robotaxi is the thing you can add to the network that makes money for you. It's two different products is what I'm hearing.
But I mean, if we go back to AI day one, like the whole premise of that whole day was that all these vehicles were going to be part of the robotaxi network. So if they don't follow through on that, that's like it's a loss of, I mean, it's a lot.
Yeah,
it's
practically
wrong, right? A promise, right? But it's not a promise, but it was a vision. And if they don't follow through on that vision, I think a lot of people have made decisions based on that. And like I talked about this with Hertz, right? Hertz has basically said, we're investing in this, and in the future, all these vehicles can be robotaxis. So, I mean, they may not have said, okay, we are expecting this to 100% happen, but they are placing a bet on that it will be a possibility. So, like if Hertz, with how many ever thousands of cars they have of Teslas, if they're not getting in on this, I think, and then an equal number of people just as buyers, owners.
I think a lot of people are still just discounting the value of FSD at level 3 and 4, where you have to, like, if you don't have to even pay attention or have your hands on the wheel unless the car tells you to, like, that's a significant level of value added to FSD as a product, especially if they can do that at a level of safety that, is provably 10 times safer than a human. And so I think hardware 3 is going to be perfectly capable of level 3 and level 4 autonomy. And that is going to be a massive game changer and they'll pursue an aggressive pricing strategy. I've been saying this for a while now, that they'll offer free trials. You can use the software. They'll offer you tiers. You can buy the level 3 tier. You can buy the level 4 tier in a subscription. And that once you experience those products, then they'll have a pricing strategy that's meant to optimize revenue and take rate. And that is huge. But yeah, you don't have to get all the way to robotaxi and all the question marks there about, do they have enough nines in the March of Nines? How does the regulatory outlook look like? You can do 3 and 4 probably. You can just backdoor that in. And that, to me, once they offer that free trial of FSD to anyone in the United States, to me, that signals that future is on lock, that the level of safety of the system is to such a place that Elon's not worried about PR catastrophes caused by dumb people doing dumb things with the system. So I think that's my stance on where we're at, and that with hardware 4, that gives them a little bit more leeway to experiment with ways to get all the way to a robotaxi future that they don't have with hardware 3. It just gives them a few more tools in the tool belt to solve it the rest of the way.
Yeah. I think the thing that has me, and I'll give it to you, Richard, then we'll wrap it up here. The thing that has me just a tiny bit concerned, and it's not like really concerned about the company's success or anything like that, just how this is going to play out, is that when they said that hardware 4 was going to be an expensive retrofit on hardware 3 cars, to me signal that there is not just a camera and computer replacement here, is that there is a placement of cameras, wiring, harnesses, and etc. that might be part of the system that could be potentially needed to get to a robotaxi safety level, and based on the conversations they're having with regulators. Because safer than average human, by say 200, 300%, is that good enough for robotaxi, right? I don't know. I don't know the answers to these things. And it could very well be that hardware 3 is absolutely going to be able to be added to robotaxi network. It's just when I heard that, I'm like, okay, what does that mean? What does it mean that it's, expensive to retrofit? And I get Tesla always wants to make progress. That's fantastic. I love that for them. And it's phenomenal. But yeah, and I agree with Rodman. I mean, if they are selling the products, it seems like as if they're going to be able to be added to the robotaxi network. And so, Tesla doesn't lie. They're just late, right? So, we'll see. It's just hearing that it was an expensive retrofit was interesting because it implies more than just a camera and computer swap. Sorry, Richard, go ahead.
No, don't be sorry. I think didn't he say that hardware 4 was going to be in the Cybertruck?
Yes.
So separate and apart from that, he also said that most accidents were minor. And so I'm wondering if he's thinking that, since they're going to do the insurance, they can do the repairs, they can cover everything. And if most accidents are really minor, just like really minor, then maybe FSD is looked at in a little different way also. If you basically control every aspect of the transaction, maybe you look at the risk a little differently, and maybe you proceed differently.
Yeah, fair enough. Okay, let's wrap it up there. Thank you all so much for joining us. Thank you, everybody in the comment section, for keeping the comment section lively. Thank you, Rodman. Thank you, Hans. Thank you, Robert, for joining us today. If you do want to follow these fine gentlemen on Twitter, you can also see their handles. If you want to, let's go ahead and show them. So those are all their Twitter handles. Please go follow them. Right, Rodman? That's your Twitter handle too? Or no? Yeah. That's it. So make sure you go follow them on Twitter, which is the best social media network on earth. It's pretty fun. It's still kind of crazy though. It's a lot of haters for sure. Thank you everybody in the comment section, and of course, last but not least, producer wife, another phenomenal job. Thank you very much, rock star. And now we're gonna take it to our private Discord. If you want to join us in that discussion, consider becoming a patron or joining through YouTube. We continue these discussions in that place, and I'm super proud of our community we're building because there's some very healthy debates in that Discord. I feel like we're doing a really good job with that and keeping it just all about ideas and thinking about how the future is going to unfold, not just in electric cars, but literally everything. We're trying to figure out where the future is going to end up in the next 5 to 10 years. So consider becoming a patron or signing up through YouTube for access to our private Discord. Go ahead, Richard.
And thank you, Farzad and CM. And have a good weekend, everybody. Be well.
Thank you very much. All right, everybody.
Bye, everyone.
We'll see you there. Bye.